Hello everyone. This is the pre-market report video for today, 23rd November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Last night in US, whatever the macro released was very much mixed, but overall it favored the market. For example, the number of individuals who filed for unemployment insurance for the first time during the past week in US came as just 2,09,000 against expectation of 2,25,000 and also less than the previous value. Here, this is against what market wanted. However, in case of durable goods order change for October month compared to September month, it contracted 5.4%, whereas market expected just 3% contraction. Here, please note, in September month, the percentage change expanded 4% compared to August. So, in October, that turned as less goods order, meaning less demand for products, which ultimately means less future inflation. Now, because of this data, the Fed probability back to near 100% chance that Fed will pause the interest rate in the upcoming December 13th FOMC meeting, which indeed made the 10-year bond yield to drop 4.4%. Thus, in the end, Dow Jones increased by 0.53%, S&P 500 increased by 0.41% and Nasdaq up by 0.46%. In case of US FIX, it decreased near 4% and moved below 13. Here, I like to highlight one thing. Major AI tech stocks, Google, Microsoft, Amazon and Facebook, all those four increased over 1%. Because yesterday about the future growth projection, Nvidia highlighted more growth in AI side. However, that Nvidia stock dropped over 2%. Here, regarding the Nvidia share price drop, most finance websites highlighted that the share price was dropped due to its poor demand from China forecast. But the problem is they projected extraordinary growth more than expected in all other regions. So I don't think that's the reason. Rather, I think it's just profit booking. I mean, year to date this year alone, Nvidia share price increased over 240% and also expecting this positive results in last 15 days before their earnings release, share price increased over 20%. Please think for a second. Nvidia market cap is over 1 trillion US dollars. In Indian rupee, it's over 100 lakh crore rupees, almost 1/3 of the Indian GDP. That increased 20% in its value in the last 15 days. So no wonder there is a profit booking. So profit booking was the more probable case rather than due to demand concerns from China. Anyway, moving on. In case of oil, first of all, OPEC postponed their next week meeting from 26th November to 30th November. Second, US inventories increased over 8 million barrels, whereas analysts expected around 1 million barrels increase only. So, meeting postponed increased supply or less demand from US, which led to these increased weekly inventories, made the oil to drop around 1%. At the time of this video, Brent crude is trading around 81.5 US dollars per barrel and WTI crude is trading at 77 US dollars per barrel. Then regarding Indian ADR, except Infosys, all of them closed negative in line with the Indian market. So now, except Infosys, there are negligible arbitrage opportunities present in other three stocks because tonight US market will be on holiday. So now ADR becomes the lagging indicator. But still from plain, it looks like IT indicating a mixed flat to positive trade, whereas banks indicating negative. So that's the takeaway. Then about GIFT Nifty, today early morning it closed at 19,897. Yesterday the premium was just 50 points, equating it with the spot market, indicating the gap up opening of 20 to 30 points. So that's all about what happened on global market. Now let's discuss India related info. First of all, we know yesterday how much Bank Nifty was volatile. Regarding the reason, yesterday there was an important banking conference organized by some Indian banking association called FIBAC. Here I don't want to tell the full form or abbreviation for FIBAC. Rather, I'll show the snapshot of it. It's really a huge name. Anyway, back to the topic. whenever we have such big sector related conference, that will create a huge volatility in that sector. Since all those industry people will talk about what's positive and what's negative in that particular sector. So that is what exactly happened yesterday on the banking stocks, which in turn affected and caused some mild volatility in Nifty as well. In addition, in that conference, the guest speaker was RBI governor, and on his guest speak notes, he explained the rationale why he increased the capital requirement for the unsecured loan last week. He recommended and used this exact words: avoid exuberance as credit surges. Meaning, he want the banks not to run behind the credit growth. Basically, we can say he asked banks not to overdone. And also he clarified this, that he was not seeing any problem, but he wants banks to do their very own various stress tests to identify the potential weakness. All these warnings, in a way, it's implying that we can expect more tighter policy change or regulation from RBI, like tightening or increasing the capital adequacy ratio, etc. So yesterday itself, banks already reacted to this, but still we can expect some more reaction for this today as well. Moving on, about institutional activities, no surprise. FII net sold for 310 crore rupees and DIA net bought only for 720 crore rupees. As a summary, US market closed positive, all the US major tech stocks increased, and also tonight is holiday. Here, in my last near 1.5 years of pre-market observation, whenever US market was on holiday, at that day Indian market most of the time end up in mild positive. Exactly the same is indicating in the GIFT Nifty as well. So let's see whether this theory holds true or not. But the uncertainty around banks and negative close of Indian areas are causing some concerns. Moving on, as per stock open interest, Oracle Financial, IndusInd Bank, Kotak Mahindra Bank, SBI, ICICI Bank, IDFC Bank and AU Small Finance Bank, most banks got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, BPCL, Bata India, IEX, Bajaj Auto, Voltas, Cipla and ICICI Prudential Life Insurance got an increase in open interest with a positive price close, indicating long build-up. About the things to look out, as I said, tonight US market will be on holiday. In addition, Japanese market is also holiday. Regarding macro, during our market hours at 2:30 p.m., both whole Europe and Germany's PMI data is due, and at 3 p.m. UK's PMI data. So these are some of the items we need to keep an eye out today. Coming to technical, yesterday Nifty opened flat but had some volatility. On the downside it's 70 points and on the upside it's 30 points. So traded in a 100 points range and closed positive of around 30 points. Here I like to say one other thing. For most of the experienced investors, they had most of the trading experience was with Nifty less than 10,000. So on that perspective, 100 points is a huge number and it was more volatile as it's more than 1%. But now Nifty is around 20,000. Here 100 points was just 0.5%. So if you look closely, yesterday market moved 0.35% on the downside and 0.15% on the upside and closed 0.14% positive. Thus, according to me, in percentage term, that was not at all volatile. It's just regular price movement. If anyone says Bank Nifty was volatile yesterday, then I will accept that as it moved 1% down, but not Nifty. It's just relative theory. Anyway, I don't want to deviate the topic. Back to Nifty. Thus, on the daily chart, it formed a small bullish candlestick pattern with a long lower shadow, which resembled the hanging man pattern. We know and we discussed a lot of times, hanging man formation is a bearish reversal pattern. However, it was formed in range bound movement. Thus, the predictive value was less as it still Nifty haven't breakout from the November 16th candle. On the downside, no change. 19,650 to 19,600 is the crucial support. In that, a drop below 19,600 could potentially initiate panic, while 19,875 to 19,930 is the immediate resistance zone. Here, the possibility of moving above 19,850 to 19,900 is high, and a decisive move above the same level could push the Nifty sharp upside towards new all-time high value. However, any weakness from here could push down towards the support at around 19,650. In case of Bank Nifty, it opened and most of the day traded very weak and also closed down near 250 points. Thus, on the daily chart, it formed a bearish candlestick with lower shadows, indicating buying support at lower level. I mean, though there were several induced weakness by RBI governor in the past 3-4 days, all those times it successfully maintained the crucial support zone 43,300 to 43,200. I mean, a breach below this level could pave the way for further downside. That's a different story, but the important point is it did able to defend. So again, 43,300 to 43,200 is the crucial support, and on the top 43,650 to 43,800 is the immediate resistance, where the cluster of moving average is present, including 200-day exponential one. Then on the weekly options front, 19,900 strike got the maximum call option open interest, followed by 20,000 with meaningful new call option writing at similar strikes, which again indicating that Nifty will face tough resistance at 19,900. Whereas the maximum put option open interest was at 19,800 strike, followed by 19,700 and 19,500 with new put option writing at similar strikes. Hence, the support is at 19,700 to 19,500. About Nifty PCR, it increased further to 1.07 from 1.02 yesterday, which generally indicates an increase in bearish sentiment. Here, I did read some comments highlighting the conflict in this statement, but as per general global theoretical term, above 1 PCR indicates that the traders are buying more puts than calls, meaning bearish sentiment, and I stand by those statements as well. See, the prognosis they highlighted was that sellers selling more puts, which means positive, but that's not true. Again, here also it's just supply and demand. If there are no buyers, for whom then the seller will write the options. So majority of the world is a demand-led one. Hope it's clarified. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.